right, good day here. It's Bruce from Targeted Wealth Creation. I wanted to give you guys something on NVIDIA. I get asked a lot from my subscribers because I'll get into that a little later in the short presentation, but they ask a lot about the impact on some of their ETF income investments that own NVIDIA. And they asked me what's the impact. So let me explain how I've explained to them, and I get asked it all the time, and I thought, well, I'm going to do a video, and if I do a video for them, there's many other people that own this. This is one of the biggest FOMO stocks there is, right? I mean, it's just had an incredible run. It has some fantastic technology, it has a fantastic CEO, and doing very, very well. And I came from the tech industry. I've retired and made enough money that I retired younger to do that. So let me jump into this. So what actually happened? So on June 7th, at the end of trading, Nvidia, in the symbol NVDA, will go down effective the morning. A lot of times it'll reflect on Saturday and so forth, but you'll see it in real in the pre-market opening on Monday the 10th. So what actually happens? Believe it or not, there's no economic benefit to the corporation, and let me clarify that. What I mean is the market cap doesn't change. So let's go through the scenario. So if you own 100 shares on June 7th, right, the stock price closed at 1208.88. So 100 shares equals $120,888 is your value, your paper value of that stock if you sold it, right? All stock accounts, retail brokers show this. So what happens when the stock opens? Now understand, the pre-market, they set the price, and I talk about this the same way with stocks that get a dividend, right? A lot of my subscribers get high yield dividends. And all of a sudden that dividend and the opening on ex-dividend day gets taken out of the stock value. But it immediately does supply and demand, right? So the stock price will change, but that initial setting, it's like an IPO. They tell you a stock's going to IPO at $20. And all of a sudden you try and get in at $20 and all you can get is $20.30. Or it drops to $19.50 because the market dynamics change the price. So here in the pre-market, it will say it's going to be $120.888, right? Cents. So it's exactly the same value in your account. So there's a change, but there's no economic change. So they didn't, they did increase the outstanding shares, right? But they did it on an equal basis. So if you multiply, 500 million shares, I'm making up the number, times the stock price, and now they have 50, right? If you had 5 million and now you have 50 million and the stock price is 1/10 of the old price, your market cap, right? Your net asset value remains the same. So I just wanted to clarify that because I get asked that question a lot. But I then wanted to tell you, well, how can you profit from this? And what should you be looking out for relative to this happening to Nvidia, which just happens to be probably one of the best performing stocks. It gets hard when you're a 3 trillion market cap to have these kind of gains. That's what's been so phenomenal about it. So let's talk some more. So if you own options, right? I mean, very few retail, I shouldn't say very few, but wealthy retail players can go out and write options because remember, you got to have 100 shares to write one contract in options. So you got a $120,888 investment, and then you can say, hey, I want to sell a call next month. We'd call that a covered call, right? You own the stock and you sell the call, trying to collect a premium. Now, that's a bullish bet, but it's bearish in the sense that you're going to collect that premium if it doesn't run past the strike price of your call, right? It's 1208, or sorry, it's 1208, and let's say you write at 1240. for next Friday and you get, $15 per share, then they're going to take that stock away from you if it's anything above 1240. I think I used 1240 as an example. If it's 1270, you're only going to get 1240 for it, right? So in a way, you're taking a risk. But if it's 1239, you're going to keep the $15 and you keep your 100 shares. So I didn't want this to be an options course, but I wanted to give you some education on the option impact. So there is an impact on that. But the only thing you see it in is they adjust the strike prices and the quantity, right? If I owned one 1240, then I'm going to own 10 124 strikes. So they're going to create some weird strike prices, right? Normally strike prices up in hundreds and thousands go up every 5. But they're going to have some 4s, They're going to go down in the 120s, right? So all of a sudden it's a 124 that's, 1/10 of 1240. So that's the impact. So all of you separate to my subscribers that own NVDY, which is a Yieldmax income ETF that only mimics owning NVDY by owning by the Yieldmax company trading in the options. Okay, so they do synthetic options that mimics being long. They sell naked shorts on a weekly basis. So that's where a lot of my questions come from. What's the impact? What happens to my NVDY price? NVIDIA's $29. I don't have the price in front of me. That doesn't change, right? They still own the same amount of option exposure. Their price of the option gets cut in 1/10 in the quantity of the option. So same thing as here, right? You got 10 times as many shares, but you got 1/10 of the value, which means nothing changed. So anyway, that's the purpose of this. And then I wanted to do just a slight bit more education here. So someone asked, well, Bruce, if there's no economic reason to do it, the market cap doesn't change, why do they do it? Well, there can be an opportunity for them to benefit, but there's no immediate, they don't do it like, oh, okay, we increased our market cap 7%. No, as a matter of fact, it's worked for them because all issuing publicly traded stock companies have a limit in their charter of how many shares they can have, right? So when they're going to do a stock split, sometimes, especially at 10-to-1, that exceeds it. So they have to have a board meeting and vote to raise the allocation of shares. But they didn't raise the market cap, and they're not really issuing new shares in the sense of doing a funding. They're simply doing a split, but that requires more shares outstanding if you get the math, right? These two pieces of math result in the same person, right? And if I go over here and say I had 10 shares before, right? Then what's this going to be? These numbers are going to look like this, right? They're the same. If I had 10 shares, I now have 100 shares on the 10. All right, so get it, you guys get it. So I had taken, so the real reason to do this type of split is to make the shares more available to retail traders. Okay, I didn't look up the institutional holding, but I can tell you it's pretty large in Nvidia, right? I'll show you the semiconductor index ETF, and you'll see what their percentage, you can see it on my screen, right? So these guys are blowing up that index with their performance, right? So the thing about myself, so I took a 3-day options course in Seattle, flew up there. I lived in Southern California at the time. Went to Seattle. It was 1990. There wasn't Zoom. There wasn't, the internet the way we know it for online courses. So it was a physical course. I stayed at a Marriott, went to the brilliant course. Learned so much more. I thought I knew options, but I really dialed in on options. And one of the themes that was presented as a bonus to us option attendees was, hey guys, one of the strategies, look for companies that are announcing stock splits. And at that time, it was, and at that time Cisco was a big player in the Nasdaq, right? And later in that decade, in the 90s, they were one of the four horsemen. They were a big giant company. If you remember the dot-com boom and bust, right? The Nasdaq went to 5,000. A year or two later, it was 1,500. It just got crushed in 2020. But that run, if you were in and I worked for a big tech company. Like I said, was on the New York Stock Exchange, but it was one of the four horsemen. So I saw the gains. We had people that were, office people that were worth millions and millions of dollars that rode through that decade, right? Or had worked for the company for 20 years. So, and then to see the crash. So what you have in this is, here's a listing of the holdings of SMH, right? It's a semiconductor ETF. I love almost all of these companies, right? These are, this TSMC, right? Taiwan Semiconductor Manufacturing, and is 12.58. I mean, all these guys buy their chips, right? I know AMD does with its, retail and data center products. Clearly Nvidia, really their revenue surge is coming. They were already the go-to for gamers, right? They were the retail GPU product, number one, and AMD would probably be number two. But they were far the number one. But their data center products is what put them over the top, because big corporations spend a lot more money for infrastructure. So Taiwan makes, all these companies are tremendously large, but look at the delta. I mean, when you're 20%, you're over 1/5 of SMH. And SMH now has a 49% IV. So if you know anything about trading options and all that, you see what this is. So anyway, I wanted to go through, I mentioned this before, a couple more data points for you guys. If you own an ETF like Nvidia, which is Yieldmax, and that's the basis sort of my channel, but I'm reaching out and doing other things. It's all about increasing your wealth, how to retire, how to live on dividends, distributions, how to build wealth through them, right? Besides growth in some stocks. So this Yieldmax, if you don't know about them, look at my channel, look at some of that. And this idea for even doing a video originated out of the people that own Nvidia, which is nothing more than a single stock income, right? Monthly income. And they mimic owning Nvidia through the use of these synthetic options and naked covered calls. And this thing's producing, an 80, 90% yield. I'm in several. I'm in a MicroStrategy one, Misty. I'm in Coney for Coinbase. So have a look at those if you care. Okay. And so my point is, there's no impact to anything that. If you own Nvidia with Yieldmax, the company manages the options. You don't have to worry about it. You just get your monthly distribution. And their strike prices will change, and their quantity of option contracts will change. All right. And I mentioned this, okay? A short-term bullish opportunity may exist because retail buyers, and I didn't finish this train of thought. So retail buyers have a better opportunity. How many of you own 100 shares? Well, you own 100 shares, I just put it up there. That says your portfolio is $120,888. Well, if you've got a $2 million portfolio, then you've only got, right, 5%, 6% in Nvidia. That's okay. But you wouldn't want to have a 120,000 portfolio and only own Nvidia, right? So that's not risk management, right? So that's something I wanted to point out. And here, before I wanted to hide this a little bit. Okay. Nvidia back and forth. So I think they closed at 2.973 trillion. But all week long and the week before, with this rise they've been having, Microsoft is like 3.1 something, right? Then you have, who's the other one that I wrote in here? Apple. Yeah, duh. So, You got Microsoft on the top, 3.1 something. You got Apple just over 3. And these are companies where when I remember Apple getting there, I didn't even realize that Microsoft was ahead of them. But I think Microsoft had a decent surge. Their Azure and all their cloud stuff is really performing well. Don't think of Microsoft as Windows, right? I mean, those are the has-been days. Those produce very small amounts of revenue for Microsoft versus their cloud services, right? The biggest cloud service company is Amazon. People don't know that even that aspect of Amazon. I have a lot of friends that I used to work with that were younger are still working in the tech industry, and they're in sales and marketing and so forth for all the cloud services for Amazon. And we were selling infrastructure in the 90s and the 2000s to the data centers. So can you imagine how much $1 trillion are? So I'm rattling off this. So I want to, if you guys saw it ahead, that's fine. But I want to give you a little quiz. So imagine how much $1 trillion is. Okay. So think about it. Well, okay, somebody will say, oh, sure, it's 1,000 billion. Yeah, good. You got your basic decimal math down. Well, how much is a billion? Well, it's 1,000 million, right? So I read this one time, and I've never forgotten it. I had to write it down because sometimes I forget the numbers. But so I want you to think about this for a second. If I had, and you can put in comments to me what you thought it was before I told you, okay? So let's equate $1 to a second. And I want you to think about how long in seconds it takes to get to 1 trillion seconds. All right. So now we know that a billion is 1,000 million, right? And 1,000 billion is 1 trillion. So let's go down and think about the seconds. Okay. So let's use 1 second to equate to $1. So I think I put some lower values in here. I'm going to change them from black text. This is my way of doing a reveal, right? I'm going to make them white. Okay. So here we go. 1 million seconds is 11 and a half days. Doesn't sound that long, right? It's not even 2 weeks. All right. What's a billion seconds? Holy, 31.7 years. So if I told you you have a life expectancy of 3 billion seconds, you'd be pretty happy, reasonably. You wouldn't if you were 92. But, you know, normally that's above the average, what do you call it, that the insurance companies collect. You know, the life expectancy, right? If you look that up in an annuity table, if you look that up in an insurance table, you know, I don't even know exactly what it is. I remember when I was much younger, it was like 77, maybe 70, you know, and women typically have a little bit longer life expectancy than men. So 1 million seconds equals 11.5 days. A billion seconds is 31.7 years. So 3 billion seconds would give you 95.21, right? Or 95.1 years. That's a nice lifespan, right? 3 billion seconds. What about 1 trillion seconds? Would you want to live 1 trillion seconds? Good luck with that one, right? There's no recorded history that long ago. You're talking caveman, saber-toothed tiger, right? Fire. I'm not even sure they had fire. So that gives you a perspective. The damaging thought of all of this is we print $3 trillion a year. I think we're 31.7 trillion, you know, debt. That part is scary. I worry about that a fair amount. But hopefully this educated you, this entertained you, and if you're interested and you want to see some high yield opportunities and you love Nvidia, and that's why you tuned in here to the Nvidia stock, take a look at Nvidia, take a look at the videos that I do on these kind of funds and analyzing them and reporting on them daily and showing you the payouts. But you can go to Yieldmax ETFs. Okay, this is Bruce at Targeted Wealth Creation out. Have a good weekend. Bye for now.